Hello, we're Article 3. Thanks for attending our session here on recent FTAs and global meat trade. We are a consultancy based in Melbourne. We work on trade policy in many sectors, including global meat trade, food and beverage across the globe, and with a particular focus on the Asia Pacific region. So here's a quick overview of what we're going to speak about today. We're going to, in the first section, look at free trade agreements in the Asia Pacific region, focusing on some recent developments. Then we're going to take a look at global meat and trade policy, and particularly some emerging trends in that area. And then we're going to consider what we believe the outlook is for this year and the coming period in trade policy, looking at risks and opportunities and also some emerging trends. So first of all, Asia Pacific FTAs. Muted, KB.
So if we just move on to what the key developments are on free trade agreements, you could move to the next slide, please. So free trade agreement activity has continued during the pandemic and also into this year as trade and supply chain disruption has taken centre stage. What have been the key developments? What will we talk about today? There's 6 key developments that we see, and what we'll do now is just go through them one by one. So moving to the first development. So one of the major developments of last year and coming into this year was conclusion of the Regional Comprehensive Economic Partnership Agreement. It was concluded last year, at the end of last year, and is likely to commence early next year. And this was a major achievement for the region, considering negotiations had been going on for 14 years previously. The FTA is important. It includes markets of Korea, Japan, China, ASEAN, Australia and New Zealand. India had also been previously involved in the agreement, but then pulled out at the last minute. What's been the impact for meat? Well, the main significance of this agreement is that it really consolidates the various existing agreements among the existing parties into one single free trade area, rather than creating new and improved market access across the board. So we're now seeing common rules of origin and comprehensive coverage of commitments on trade facilitation, customs, and investment. However, that's not to say there hasn't been some improvement in tariff access. For example, for New Zealand, this agreement provides New Zealand with improved tariff market access for sheep meat and beef to Indonesia that previously didn't exist under existing FTAs. So a benefit there for New Zealand. For most other exporters, however, including Australia, the bilateral free trade agreements that are already in place generally offer the best tariff access. However, we will expect to see some potential benefits in other areas of this agreement over time. For example, it creates some avenues for tackling non-tariff barriers, including areas such as quarantine and technical standards, and it also includes some better disciplines on trade facilitation and cooperation, which can sit alongside market access commitments. So that's our first development, RCEP, or the Regional Comprehensive Economic Partnership. Moving on to the next one, also involves another major regional free trade agreement, the Comprehensive Progressive Trans-Pacific Partnership Agreement, or CPTPP. Now, this agreement was concluded some time ago, but what we're seeing as a new development is interest in this agreement expanding to new members. So it currently includes meat exporters and markets, Japan, Australia, New Zealand, Canada, Mexico, and Chile, but not the US. And this agreement is considered to be important in the region because it's generally considered to be a high quality agreement that offers the greatest level of liberalisation among the parties, sitting generally outside the bilateral agreements. Recently, there's been growing interest in other countries joining this agreement: the United Kingdom, Thailand, the Philippines, Taiwan, and Korea. Now, to date, the United Kingdom has applied to join, it is in that process. Thailand and Korea are considering joining through their various domestic processes, and Taiwan is also keen. When it comes to the US, the new Biden administration is less hostile to joining than Trump was, obviously. President Trump withdrew the US from the agreement back in 2016. However, we would see it as very unlikely that the US would seriously consider joining the agreement for several years. The new United States Trade Representative has made it clear that trade in the US will be focused on domestic jobs and recovery and dealing with China rather than free trade agreement. The Trade Promotion Authority, which is the domestic legislation in the US that's required for Congress to pass negotiated free trade agreement deals, will also expire this year, making it, as we would say, near impossible for the US to enter into any serious free trade agreements anytime soon. Now, what does this mean for meat? Well, of course, with free trade agreements, it always depends on what is negotiated in the agreement. But the expansion of this agreement to include new members could change market access dynamics. There could be some new export opportunities, say better access for existing exporters, such as Australia, New Zealand, Canada, and Mexico, to new markets, for example, in Taiwan. However, there could also be new threats, because if the agreement does expand, exporters may need to compete on new terms, for example, with the UK and with the US in a potentially wider range of ASEAN markets, as well as perhaps in future Korea and Taiwan as well. And as I said before, it just depends on what's negotiated. To date, no new members have joined this agreement, and we need to see what the outcome is as we move forward. So what's the further development? Well, alongside the large regional agreements, we're also seeing existing bilateral agreements and other regionals expanded and upgraded and improved. Post the pandemic, many FTA partners are now looking at how to get more out of their existing free trade agreements, how to strengthen relationships with reliable trading partners, and how to adapt older free trade agreements to new trade realities. For example, New Zealand and China recently upgraded their bilateral free trade agreement. Australia, New Zealand, and ASEAN are in the process of upgrading their own regional agreement. And ASEAN itself is also looking to upgrade some of its free trade agreements with external partners, including Korea. Australia may potentially look to update some of the older bilateral agreements it has with Japan and Korea as well. What might this mean for meat trade? Well, as yet, most of these upgrades have not resulted in significant improvements in market access. And we've seen that in the case of RCEP. RCEP itself has recently set the baseline for access among most parties in the region. So we would expect improvements in other regional and bilateral agreements to be more minor and incremental, particularly in the current environment. However, we would see the focus in these agreements shifting to other areas of trade as part of the updating process, keeping in mind that many of these agreements are now more than 5 years old. So opportunities for improvements for, say, technical market access and trade facilitation through addressing non-tariff barriers to trade, services, and also investment. But as I've said, these are a work in progress. Many of these upgrades are currently in place or just beginning. Now turning to the US and China, and the focus here, of course, being on the phase 1 trade deal that was agreed between China and the US in early 2020 under the Trump administration. The outcomes of this deal are rapidly fading and trade tensions are continuing. It's broadly among trade commentators consider that the phase 1 deal is generally not delivered. China had committed to purchase agricultural and various other commodities under this agreement. These commitments have not been met, primarily due to a combination of a high tariff environment and also the impact of the pandemic. However, we would mention the phase 1 agreement because it is significant that it did include some provisions, and still does, to help address technical market access problems faced by US agriculture and food exporters. More along the lines of to do with inspections, authorizations, certification of plants and product for example. However, it's not clear to what extent or whether these benefits have yet materialised or whether they might do so in the future. For example, one of the benefits was that China agreed to expand the scope of US beef products that were allowed to be imported, also eliminated some of the age restrictions on cattle slaughtered for export to China, and also recognised some of the US beef and beef products traceability systems. So there were some outcomes in that agreement in terms of technical standards and authorisations that were significant. For meat, well, as I've mentioned, as per the agreement, China has expanded its internal list of US beef and pork products eligible to enter its ports. USTR also reports that this includes some processed meat products as well, and that to date, China has also removed references to age restrictions and published an updated list of US beef and pork establishments that can export to China. So some improvements there on paper. Whether they've materialised or not yet is not clear. We'll have to wait and see what the trade flows are telling us. Some of these technical provisions in the agreement are definitely worth building on in future agreements, as we see it, and also with other trading partners. Moving forward though, however, it's likely to be some time before the US and China are ready to engage on a phase 2 agreement, or for the US to engage in any FTA with any trading partner. As I mentioned before, the US has not really changed its position on trade in China under the new administration. The USTR has announced that tariffs are to stay for the moment, and the US is also proceeding with other legislation and approaches to decouple supply chains from China, to focus on building farming and manufacturing to support jobs at home, and trade policy is only a very minor part of the US-China challenges. What about the United Kingdom? Well, the United Kingdom, we're seeing expanding its trade footprint in the region post-Brexit. It has a full FTA agenda on the cards, though not all of these agreements are likely to materialise. As I mentioned before, the UK has applied to join the CPTPP. It is also negotiating bilaterals with Australia, New Zealand, and the US, and seeking further bilateral arrangements with other countries, for example, Thailand. Alongside this, of course, there have been various continuity agreements which have been negotiated for Brexit trade, which are principally shifted the terms of the EU agreements over to the UK and its trading partners, say with Japan, Vietnam, and Korea. So for meat, what would this mean? Well, entry into the CPTPP would obviously expand UK access to some ASEAN members it currently does not have EU or previous EU arrangements with, for example, Malaysia, as well as bilateral agreements, for example, with Australia and New Zealand. Other UK bilaterals, if they go ahead, could potentially improve on existing WTO access for UK exporters. For example, potential agreements with Thailand and also Australia and New Zealand. Importantly, though, most of the EU continuity agreements that the UK has don't really improve the terms of access that have been previously granted under the EU agreements. And none of these FTA arrangements that the UK is currently looking at involve China. So that's the UK. What about Europe? And we'll hear more about Europe later, but Europe also is looking to build its trade relationship in ASEAN growth markets. We've seen recently the EU-Vietnam FTA concluded, which was a major achievement. However, ongoing bilateral negotiations with other ASEAN members have been long running and are more problematic, for example, with Indonesia and Malaysia. And transatlantic trade talks between the US and the EU are not really going anywhere. Australia and New Zealand bilateral negotiations are ongoing, though agricultural market access and also climate change are difficult areas, particularly with Australia. So in terms of outcomes here, we would not expect much in terms of outcomes for agriculture and particularly meat in the EU's Asia Pacific free trade agreements, particularly at this point. And the ASEAN agreements with the ASEAN countries are not expected to move quickly. We don't see the EU and the US reaching an agreement on an FTA anytime soon. Notably, the EU already has good access for red meat as a result of its own free trade agreements into Korea and Japan. About Latin America, moving further across. So major traders, China, Japan, and Korea are increasingly focusing on Latin America as a means to diversify and expand their markets for manufactured exports and to secure reliable supply of agriculture and food imports. So what we're seeing here really is an increasing focus of China and Korea on improving economic cooperation with Mercosur countries, so involving Brazil, Uruguay, Paraguay, Argentina. The Mercosur bloc, however, is bound to negotiate as a bloc. So this means that countries, for example, like Brazil, are unable at this point to conclude bilateral FTAs with major trading partners. The US and Brazil had agreed to a sort of trade deal under the Trump administration in 2020, which did allow for some improved Brazilian beef access to the US market. However, this was not a comprehensive free trade agreement. And as we understand it to date, volumes have not been huge in terms of improved trade. The EU's FTA with the Mercosur countries is stuck at the moment, with EU member states unwilling to ratify the agreement, principally due to agriculture, including beef access, and also sustainability concerns. Instead, we would see negotiations with the Pacific Alliance members in Latin America as much more nimble. And these Pacific Alliance members are Chile, Peru, Colombia, and Mexico. There is currently a free trade agreement under negotiation between this group and associate members, Australia, New Zealand, Canada, and Singapore. Korea has also expressed interest in joining this agreement and these negotiations, as has Japan. So moving forward, what will we see there? Well, potentially some partial deals with Mercosur countries and major traders, such as China and Korea, but rather than creating tariff access in terms of like a traditional free trade agreement, but would deal more specifically with technical issues in the same way the US has approached Brazil, which may result in some improved access for Latin American exporters into these markets. However, full FTAs with Mercosur as a bloc, which would include Brazil, are not likely in the near future. And then last of all, I would like to just talk about Australia very briefly and what Australia is doing in the free trade agreement space. Essentially, the focus here is on, as we see it, on building new opportunities with reliable trading partners. So Australia at the moment is seeking to best utilise and build on its already advanced FTA framework to strengthen and diversify its export markets, including for beef. As you're probably aware, Australia is already part of major regional FTAs, RCEP, CPTPP, has a major regional agreement with ASEAN and New Zealand, and bilaterals with principally all of its major trading partners, excluding Taiwan. These bilateral agreements already provide Australia with significant market access into Japan and Korea, as well as the US, China, and Indonesia. There's also been some recent new bilaterals which have also helped to improve access across the board, such as the Australia-Indonesia Comprehensive Economic Partnership. So what are we looking at for Australia in terms of FTA developments in the near future? Well, as I've mentioned before, an upgrade of existing arrangements, which are most likely to focus on improving technical access with ASEAN potentially, and also Korea and Japan. And what we would see as new trade arrangements rather than formal agreements or treaties. For example, memorandums of understanding, mutual recognition agreements, or partial arrangements that build economic and trade cooperation where free trade agreements may be too difficult. And some of these arrangements will likely sit alongside free trade agreements. So that wraps up the major recent developments on free trade agreements in the region. And now we can move on to some of the broader trade policy trends that are occurring.
Okay, thanks, Kristen. That was very, very comprehensive. I'm just going to give a few brief notes on some emerging trends with regards to meat and trade policy. We could go on to the next slide, thanks. So what we're really getting here is a situation where we're having non-trade issues emerging into the trade space. Now, these are issues that we generally associate with voluntary sustainability standards and certification. So we'd be talking about things like the Roundtable on Sustainable Beef, and also other similar schemes that are affecting other commodities or utilised by other commodities, such as the Better Cotton Initiative or the Roundtable on Sustainable Palm Oil, or FSC and PFC forest product certification. So the issues that are really starting to pick up and find their way into the regulatory space as it affects trade, deforestation, climate change and greenhouse gas emissions, labour issues, and broader supply chain transparency and accountability. So in the past, we've already seen some reasonably large regulatory measures that impact trade hitting timber products and pulp and paper products as well, fisheries, as well as conflict minerals. So other commodities are going to be affected by forthcoming policies, and that includes beef, and it also includes soy, as well as other agricultural commodities as well. If we could go to the next slide, thanks. So in terms of the new regulatory areas, we have the EU being the clear leader with its regulatory proposals. So we have probably the most advanced of these is the deforestation regulation, and that's designed to prevent imported deforestation. That's something that's been in train since around 2011. It started to get more traction in 2013. And that process has really been building, and we're looking at something that will come up as a full regulatory proposal in the second half of this year. The next one is human rights due diligence. That is was voted on by the European Parliament. Last month, and also the carbon border adjustment mechanism, which I'll go into more detail a little bit later. The UK is following the EU with a similar deforestation regulation that was announced, I think it was in October last year. And that's basically a due diligence proposal, very similar to what the EU has already done with timber products. And the idea there is that you, as an importer, you have to undertake due diligence that you do not import products that have had some sort of illegal logging or forest clearing associated with that, and that includes beef and cattle. And the US is moving towards greater levels of regulation based around labour in supply chains. So what we're seeing there is people taking the US Department of Labour child and forced labour list a bit more seriously, and working through customs and border protection there to hold up the imports of shipments from particular companies or particular areas. And we've seen this most recently with Top Glove in Malaysia, as well as a couple of the larger Malaysian palm oil exporters. Now, these are the three clearest examples of this, and we may see other importing markets follow. Now, in terms of managing the risks associated with this kind of regulation, it basically comes down to managing the risks overall. So rather than being sort of full-blown trade restrictions. Policies are generally oriented towards reducing risks of deforestation, or of risks of human rights abuses, or of risks of supply chain invisibility. So with other commodities and sectors, what we've seen is just requirements for companies to introduce greater risk management systems for compliance, such as voluntary certification systems, or in some cases, government mandated systems. But the voluntary systems may not always satisfy the regulatory requirements as they emerge. And similarly, they might not also prevent disruptions to trade. And going back to the example of Malaysia, the Customs and Border Protection notices really, they emerged despite the exporters having very strong voluntary sustainability measures in place. And on to the next slide, thanks. So as I mentioned before, the carbon border adjustment mechanism is still an unknown. We're hearing that it's a more fully fleshed out proposal will emerge mid-year or later. The scope of the proposal and whether it will include agriculture is still unknown as well. But what it will do when it does emerge is that it's going to prompt a very, very large debate, because obviously the carbon border adjustment will push up the costs of imported meat going into the European Union from certain countries. Now, debate will emerge about different systems, so grain-fed versus grass-fed for carbon intensity, and how that's going to impact the cost. And following on from that, there's going to be additional debates about carbon intensity in feed, focusing on imported soy products going into the EU. And that's already started as well. There's been a long debate about protein self-sufficiency for feed markets in the European Union. But what we really will see going forward is in Brussels, just a very, very intense political debate between the Commission and the Parliament and the Council over how to best manage carbon border adjustment and how that's really going to affect the EU's trading partners. One of the sort of bigger flow-on effects there is how this regulatory regime really, really starts to impact other countries, and whether they decide to adopt similar measures or whether they're just basically forced into a situation where they have to. And with that, I'll leave it there.
Thanks, Khalil. For the final section here, I'm going to have a look at where we see things sitting in 2021, some risks and opportunities around trade policy, and also some trends that we expect to play out over the coming year or two, really. So, risks and opportunities. One of the risks that we've identified are the import restrictions that we've seen China put in place. There's been a lot of press around China's decision to restrict imports or actually prohibit imports from some Australian meat processing plants. There have also been some additional quarantine rules for imports of meat, frozen meat from Latin America. This was more around fears of transmitting COVID in frozen food. Some other risks include ongoing soft demand in the United States. Restaurant channels in parts of the country are still affected by COVID-related shutdowns. This is leading for lower demand especially for grinding beef and these kind of restaurant channel staples. This is particularly an issue for Australian exporters of frozen beef. Again, on the supply side in Australia, slaughter numbers are down. And this has got to do with the stage that we're at in the herd cycle. It finally started to rain, and so producers are rebuilding herds. And as a result, prices are relatively high and supply is tight of animals. And this is a specific issue. Last month, United States exporters triggered the special safeguard measure when they passed a certain quota of exports to the Japanese market. As a result, for the month of April, the current month, there's an additional tariff of around about 10% that's applied to US beef entering Japan. As a result, we can expect to see at the moment some fairly low volumes of US beef going into that market, but the quotas will reset at the end of this month, so it'll be temporary. So a few opportunities around these risks or associated with some of these risks, and some of them are independent. There's still a protein deficit in much of Asia, especially China, due to the lingering effects of African swine fever that wiped out a proportion of the Chinese pig herd. So exporters from all parts of the world of different animal proteins have some, all else equal, they have some opportunities in the Chinese and broader Asian market. The United States is now allowing beef from Europe, from the UK and the EU for the first time since mad cow disease. This is not likely to be a major impact in terms of volume trade, but some of the higher value premium cuts may find their way from Europe to the US now. The US has improved technical access to China. This was referred to by Kristen earlier. Under the terms of the Phase 1 agreement, China agreed to reduce some of the measures that they apply, technical measures they apply to imports of US meat. This is around certifying exports, recognizing US certification, and recognizing traceability systems in the US. But a big one was that China agreed to reduce the strictness of the hormone growth promotant ban on imports, and this has allowed more US beef to enter China from a low base, but growth rates have been significant. The US has an advantage in the Korean market, South Korean market, because they have a very large quota before safeguard tariffs kick in. This puts them ahead of their main competitors. And Latin American exporters are steadily improving their technical access to the big markets in Asia. This has been something we've seen over the past several years, but the more plants that are certified in Latin America, the more we'll start to see volumes flow from those producers into the big Asian markets. So some expected trends for this year. We're expecting rising demand, rising volumes, and in some areas, strong prices, shall we say. This is expected to be underpinned by recovery from COVID as economies come back to life, and especially as government stimulus money washes around in many of the major economies of the world. We expect this trend of technical access to Asia from Latin American exporters improving, and export volumes expanding, especially at the value end of the market. And we can expect increasing exports of US beef to the Chinese market, partly due to the purchase commitments under the Phase 1 agreement, but probably more due to the improved technical access that I mentioned earlier and that Kristen went over in more detail. And a smaller point, US is now importing this EU beef, so we'll see non-zero exports of beef from the EU and the UK to the US market. Some technical barriers that we expect to persist. There are still complexities around the UK's exit from the European Union. The EU and the UK are negotiating how to divide the quotas that they offer, the global quotas, tariff rate quotas, and also the country-specific tariff rate quotas that they offer to some of the world's largest meat exporters. They've actually settled their quotas reportedly for US exports of beef, but other countries not yet. So that process continues. We can expect strict enforcement of technical barriers, even pedantic enforcement in some cases in some of the big Asian markets. And we can expect this technical complexity to continue for meat entering the EU market, maintaining the hormone ban, of course, which has been a bone of contention in global beef trade for many years, but also increasing the sustainability barriers that were mentioned by Khalil just previously. I guess what we're seeing is that in the coming period, the exporters that we expect to prosper are the ones whose governments can best manage the technical barriers present in the world's big markets. And this obviously is putting Australia at something of a disadvantage at the moment. It's well known that the access of Australian officials to their Chinese counterparts is not what it should be. So we can expect that the governments that are able to build and maintain those government-to-government ties can expect their meat trade to improve. So that's all from us here at Article 3. Thank you very much for being with us today. And when we log in for the live version of this meeting, we're looking forward to receiving your questions. Thanks very much.